Fly in Pensacola, Florida. Thank you all for being a part of today's webinar. We're going to talk about day in the life and the career path of investigating and preventing fraud. It's an awesome topic. It's going to be a lot of fun, and we had a great response to the webinar too. So as most of you know, whether you know us from Accounting Fly or from our career fair at National Meet the Firms Week, we like to provide career education information for you students or experienced accountants, and a lot of the times we want these sessions to be focused on career path. Today is no different, and so hopefully you'll walk away from this knowing what some projects in investigation and fraud prevention look like. I know that you will, because our speaker today does it for a living at a fantastic firm in Washington State. The firm that is sponsoring today's presentation is Clark Nuber of Bellevue, Washington. So Clark Nuber is in Bellevue, just outside of Seattle, and one of the largest top firms in the country. They're in the top 200, but very close to the top 100, and has been consistently named as one of the top firms to work for. Also one of the top firms for women to work for. Some very distinct honors for Clark Nuber, and a fantastic firm if you are currently on the job market. Also, let's see. So we've got a couple of people from Clark Nuber. So first of all is Lizzie Rom. Lizzie is the HR manager for Clark Nuber. Lizzie, we really appreciate you being on the call today. How are you?
I'm great. I'm looking forward to it.
Awesome, thanks. And also Pete Miller. So Pete is a shareholder with Clark Nuber as well as a certified fraud examiner, and Pete's going to be doing a lot of the heavy lifting on the presentation. Pete, welcome.
Thanks for having us.
Great. Couple other housekeeping items, everybody. So there's going to be Q&A at the end. You have a control panel that allows you to ask questions of Pete, so please ask questions. Lizzie's going to ask Pete your questions towards the end of the presentation, as well as provide information if anyone's interested in applying to positions at Clark Nuber, information at that as well. We're going to kick things off with a little bit of an experiment. I'd like to know, and so would everybody else, who's on the call today. So it'd be nice to know your experience level. And are you a student, like it's a sophomore or a junior, sort of a younger student, sort of an older student, like senior or master's degree? Are you a recent grad, so 0 to 2 years experience, or do you have 2+ years of experience, or have we completely missed your group altogether and you want to do over? You're something else. So I'll give everybody just a second. We've got about 50% of the attendees. Okay, now we're getting into the 70s and 80s. And what I want to do is show you, so I'll read this off to everybody, but about 26% is either a senior or master's, about 30% are recent grads, about 30% are 2+ years experience. We'll give about 2 more seconds, 3 more seconds for that, for everybody to submit their votes. All right, fantastic. All right, so there's your results right there, and Pete, Pete, actually, I'm going to ask you, can you see that? Are you seeing what's your experience level?
Not yet.
Okay, maybe it doesn't come up. What about you, Lizzie?
I see it. Yeah, it's there.
Okay, cool. So with 84% everybody on the call, 30% has 2+ years of experience. Roughly 30% is a recent grad of 0 to 2 years experience, and roughly a little bit less than a third is a senior or master's. But hey, good for you, for the sophomores and juniors on the call. Good for you for taking an early interest in career opportunities. That is a major thing we promote at Accounting Fly. All right, I'm going to hide the results, and we should be able to go back to seeing your screen, Pete. Yeah, there it is. Fantastic. So with that being said, I appreciate everybody participating in that. I'm going to hand it over to Pete Miller with Clark Nuber. Pete, what I'd love you to do is, I know you got a fantastic presentation lined up, but I'd also like to just know you, and maybe you could introduce yourself and the firm as you get going, and then towards the end we'll bring Lizzie back in for some Q&A. So Pete, take it away, okay?
That sounds great. Thanks, Jeff. And thanks for the setup too. I'll move you right into my my first slide, I'll tell you a little bit about myself, a little bit about Clark Nuber and our firm, and then we'll jump into the presentation. So I'm a Northwest native. As Jeff mentioned, Clark Nuber is located in Bellevue, Washington, which is just outside of Seattle. I grew up in the area. I've been here my entire life. Graduated from Western Washington University in Bellingham, which is kind of north near the Canadian border, and started at Clark Nuber right out of school. I've been here about 15 years, and as Jeff mentioned, I'm a shareholder in our audit practice. As the slide says here, I've got a couple of industry concentrations. I work a lot with construction contractors, hotels and restaurants, so like hospitality companies, and then the Puget Sound market, the Seattle market, has a lot of technology companies as well, and so that's a practice that I have too. We do a number of employee benefit plan audits. We do about 180 of those a year, 401k plan audits, and that variety. I participate in that practice. But the reason I'm here today is that I lead our forensic accounting and fraud investigation practice. And as we get kind of towards the end of the session, I'll tell you a little bit more about that and what that means and the type of work that includes. That represents probably about 20 to 25% of my time that I spend with my clients, about 20 to 25%. The rest of the time, I'm doing these other audit types of things of looking at financial statements and so on. I am a certified fraud examiner, and Jeff mentioned that. I'm on the board of the Pacific Northwest chapter of the Association of Certified Fraud Examiners. And then lastly, relative to fraud, I author a blog on clarknuber.com called Focus on Fraud. So I encourage you all to head out there and take a look at some of my blog posts. I've been doing that for about 6 to 8 months or something like that. So a lot of good information out there. So that's a little bit about me. Clark Nuber, again, a little more information there. Founded in 1952, so we're 62 years in business. Always been in one office in Bellevue, Washington, and now we've got about 185 or so employees, and we're continuing to grow. And the three things I'd like to just mention briefly about the firm are, who do we serve, what do we do, and what makes us different. So who do we serve? We've got three main client segments that we work with. Privately held companies, so we really don't do a lot of work with publicly traded companies. We focus on the private company sector. Not-for-profit organizations. We are the market leader in the Puget Sound market serving not-for-profit organizations, and that's really a nationwide practice getting to that point now. We've got clients all over the country. And then we work with high net worth individuals, so individual tax planning practice. And what we do for those clients, we do a lot of this compliance types of things that you would imagine. We do audits and reviews and prepare tax returns and so on. But we've got a lot of different specialty services that we provide too. International tax, state and local tax, obviously the forensic accounting work that I do, and just a variety of consulting. So we get to do a lot of things with these clients, and we get to know them really well, which is really terrific. The thing that makes us different in this market really is I kind of think of Clark Nuber as a Venn diagram where you've got two circles that meet in the middle, and one circle represents really strong technical depth and industry know-how. And we've got that in spades, and we compete with the largest accounting firms in this market in that area. We've got really, really bright, intelligent people, information that you would expect out of a big firm. But we are all also in one office, and so you get that same interaction that you would hope to get from kind of the down the street local CPA. You get that great chemistry, fit, and feel. So we're the combination of those two things, and that's a pretty unique differentiator for us, and kind of makes this place pretty special. So anyway, I've been here my whole career and plan to continue that. But with that, let's jump into the heart of the talk, and wanted to share just a little bit about some objectives I'd like to accomplish today. I want to give you a little bit of background on fraud and some theory around how it happens and why it happens. And then jump into an understanding of the problem and some solutions as well. The understanding of the problem, I'm going to walk you through some highlights of a survey that gets done every 2 years rather, by the Association of Certified Fraud Examiners. Some really, really good information. And then what I garner from that is, how do we prevent this from happening, or how do we detect it if it is happening? with the idea that any company is likely going to have a limited amount of resources that they can put into a fraud prevention program. So let's get the biggest bang for our buck, and use the solutions that really work and that are effective. Then I want to jump into the career opportunities, talk a little bit about that, what types of things you could be doing in this field out there in the marketplace, and then share some common projects that I work on. So let's jump into that background and theory piece. Just to be clear that we're all on the same page, we're going to be talking about occupational fraud today, and you can see the definition of that on your screen. And I want to make this distinction. It's different from cyber fraud or insurance fraud or tax fraud or even identity theft and things of that nature. So, but it's basically somebody using their position in a company to get access to assets that otherwise don't belong to them. So just keep that in mind, that that's what we're talking about today. So on a overview basis, just want the certified fraud examiners tend to separate types of fraud into three main buckets. Asset misappropriation, which basically represents theft or embezzlement of some sort. Corruption, which tends to involve things like conflicts of interest and bribes and kickbacks and things of that nature. And then financial reporting fraud, where you're intentionally misstating the financial statements to drive a business transaction one way or the other. A lot of our companies, they're required to issue financial statements by a bank or some other institution as a result of getting a loan. It's a covenant that they've got to fulfill. And so some companies are motivated to present results that are rosier than they actually are. What this graph is showing you, the graph itself represents the frequency that these frauds take place, again, based on this study. So you can see that asset misappropriation and theft tends to be the more frequent type of fraud, and financial reporting is more on the lower frequency end of things. However, if you look at the little table below the graph, you'll see the average dollar amount of each fraud in those categories over a period of time. And so you can see that financial reporting fraud category, while it's not very frequent, it's extremely impactful, in the millions of dollars of average fraud size. So, part of this is going to be, keeping an eye out for the big ones that can happen, and part of this kind of prevention process winds up, trying to prevent the small things that can add up. So that's kind of a lesson learned there, and again, just a baseline for what types of things we're talking about here. The asset misappropriation, the next slide, we'll talk a little bit about the different types of ways that can happen, and we'll get into that. Fraudulent financial reporting, kind of the poster child for that prior to Enron, which I'm sure everybody's kind of remembers and is familiar with. That was a big financial reporting fraud. The poster child prior to Enron was a case called ZZZ Best. It was a carpet cleaning company based in Southern California that perpetrated a huge fraud, and I won't get into it here just for time restrictions, but head out to Wikipedia or just kind of Google ZZZ Best, and you'll find pages and pages of information on that. The Wikipedia page is actually pretty good, and it's a great case that kind of defines financial reporting fraud, and prevention techniques around that have developed over time, kind of based on that case. So FYI there. But so this next slide, like I said, deals with the different types of asset misappropriation, and like I said, there's a variety of ways that this can happen. And so as we're talking about prevention, it's important to kind of understand what all those things are and the relative size and importance of those, so that you can design a prevention process and approach that is right-sized and considers these different risks. So what you're looking at is a heat map, and it's kind of measuring the average size of loss, which you'll see on the vertical axis, and then the amount of times that it actually happens, which you'll see on the horizontal axis. And so if you've got both of those things going on, you've got a big issue that you need to keep your eyes on. So the things that are more at the top of the scale, check tampering. So you're taking a check and you're whiting out the payee line and putting something else in, or you're forging a signature or something like that. The average size there is about $120,000, and it happens about 10% of the time. And on the far right, you'll see billing, which is setting up fake vendors and things of that nature. Average size there is about $100,000 and 22% of the time. So, like I said, organizations have a limited amount of resources that they can put into these types of programs, and so it's really important to make sure that you're tackling the biggest issues first, rather than spending all of your time worrying about, say, register disbursements, which you see happens about 3% of the time, kind of in the lower left corner. So these are the different varieties of schemes that you can perpetrate that represent misappropriation or theft. And then this slide really just shows it's that same information, the same data from the previous slide, but more in a graphical nature, just so that you can see it a little bit more clearly. I know that's not the easiest thing to read, that prior slide, so but you can see the variety of ways that it happens, and this is sorted by dollars per case, and you can see the relative percentage of occurrences as well. So with that kind of introduction, I wanted to start to talk about a fraud prevention program, and this is kind of the quick and dirty steps that I think about in creating or developing a fraud prevention program, and kind of ongoing maintenance of that program as well. And we'll talk about these in a little bit of detail, certain of these things. First and foremost is to understand a concept called the fraud triangle, and I'll get into that, but it basically is the kind of the cornerstone of fraud theory that was developed some time ago around how fraud happens and the right circumstances that create that type of environment. Secondly, is setting the right tone at the top. Fraud prevention programs are only as good as the folks at the top that are leading the charge and professing good business conduct and good business philosophy. So you could have a terrific program, but kind of have somebody that doesn't believe in it at the top, or somebody that doesn't have the right ethical stance at the top, and the tools just won't work. Think of it as having a wonderful stable of wide receivers on your football team, but you just don't have a quarterback to throw them the ball. They won't have the best statistics around if they don't have a quarterback throwing them the ball. So kind of think of it that way. Thirdly is hiring and retaining qualified employees. So you've got to have folks that are able to fulfill those types of things that you're putting into this prevention program. Fourth is providing adequate accounting system resources. So the accounting department is the source of all of the information that comes out of the business transactions. Terrific source of information, and the devil is always in the details. I've done studies on fraud cases that I've worked on, and 90% of the time or more, the information that ultimately led to the uncovering of a fraud was available in the ongoing accounting systems. And so having good systems up and running that provide meaningful information to people that need to make decisions is really important to a successful program. Fifth on this list of steps is performing a risk assessment. And a risk assessment is it's kind of like that heat map. It's understanding the types of risks that you've got related to fraud and related to other things, and then understanding the relative magnitude of that risk, how much it can mean to the organization, and the likelihood that it'll happen. After you've performed that assessment, you can start to decide the things that you want to tackle first. And then lastly is just establishing good internal control procedures and regularly monitoring those procedures and financial results. So you perform a risk assessment. You need to design controls that will head off those risks or mitigate those risks. And then you need to monitor the performance of those things. So I think of this as steps 2 through 4 is really getting the right pieces in place and making sure that you've got the right team assembled. Number 5 is really designing a system, and then 5 and 6 is just monitoring that system, and then 5 and 6 is always a kind of a wash, rinse, repeat process where you'll constantly need to kind of tinker with your risk assessment because the organization is a dynamic one, and there's always new things coming up. So as new things come up, that presents new risks, and you've got to go through that process again, and so it's kind of a continuous cycle. So this is the fraud triangle that I mentioned before, and this was developed by a guy by the name of Dr. Donald Cressy, who's a sociologist, and he studied bunches and bunches of cases of fraud and found that these three elements need to be in place for most fraud schemes to really be pulled off. And they are motivation, rationalization, and opportunity. So the motivation piece, that relates to, basically somebody's got to have some kind of need, and usually it's a private financial need in order to start down the road of a fraudulent act. They've got, think of it as unpaid medical bills or credit card debt, or even things like substance abuse problems or gambling habits and so on. They've got to have some kind of need that probably they're not willing to share, and they're motivated to perpetrate a fraud because of that need. So that's got to be in place. The second thing is this rationalization. These are things like where the employee is rationalizing that the organization owes this extra money to them. They don't. I kind of call this excuses, but it basically boils down to they don't know how much I do for them. They don't know how valuable I am to the organization. If I were to leave, this place would fall apart. They owe it to me. And it's also things like, well, the owner is able to get a little extra money out of the company, so I should too. If you've got somebody at the top that's doing foolish things, then the folks down the chain will also do foolish things. So they've got to be able to rationalize their behavior somehow. And then lastly is an opportunity. Somebody could be motivated as much as you can imagine, and they can rationalize something all day long. But if they don't have an opportunity, meaning they don't have access to assets, then they won't be able to perpetrate it either. So these three things need to be in place. So with that in mind, how can we prevent fraud? And I kind of think of the fraud triangle and prevention of fraud as a three-legged stool, and you can see that picture up in the corner of this slide. If you can knock one of those legs off, the whole thing will fall apart. And so the easiest thing that as accounting professionals that we have an ability to affect is the opportunity side of things, and that's where you see risk assessments going on and the insertion of strong internal controls and things like surprise audits or internal audits and fraud hotlines and those sorts of things that need to be in place to get the information to come up to the top and to understand to cut off opportunity at the pass essentially. But that's not to say that we should ignore the other two areas either. You can also cut the leg off of the motivation piece. Employee assistance programs is a great way and a common way that fraud gets detected, and it's a great prevention tool as well. These are programs that are available that companies sponsor. It's kind of like outside counseling on an anonymous basis, where somebody feels like they've got to pay for medical expenses, for instance, or they've got kids in college, or that motivation piece. They can get that off their chest in an anonymous way, and perhaps kind of brainstorm and come up with a third alternative that doesn't involve fraud, that's great. Communicating with employees and understanding what where those motivations are is also another way that this can get uncovered or stopped before it starts. And then in the rationalization side of things, the thing I think of there is that we're going to turn this on its ear and rationalize your employees, by way of compensation or by way of incentivizing them to do the things that you want, rather than them creating rationalization around things that you don't want them to do. So a couple of graphs that kind of further this point. This warning signs piece, this is the motivation. The study that we'll talk about here in a minute, it goes into, has a lot of statistics and detail, and using hindsight, they look back at warning signs that were in place that could have been motivating factors for the people that perpetrated these frauds. And when they used hindsight and looked back, you can see that a great majority, a lot of the cases, the perpetrator appeared to be living beyond their means. And again, you'll see this is 3 years worth of studies that I've got on this slide. Again, a lot of them had financial difficulties. A lot of them had control issues, or they're unwilling to share their duties. A common way that fraud gets uncovered is when you're doing job sharing or mandatory vacations, where somebody else has to step into your shoes and do your job for a little bit. When that happens, a fraud can be uncovered. So people that are unwilling to let those types of things happen, they never go on vacation, things of that nature. That falls into these categories. Where they're unusually close with a vendor or a customer may represent that they've got some kickbacks or bribes that are going on, and those circumstances appear to be in place. And you can see on down the line that there were warning signs. So when I'm talking with owners of businesses and executives of businesses that I'm working with, having a good relationship with your employees, particularly those that are involved in the accounting and finance functions, is critical to your risk assessment in an overall basis. You've got to be able to have a good enough relationship where you will understand and become aware of these motivating factors that can pop up from time to time. If you know that somebody is going through a divorce, or somebody has a parent that's ill, or something like that, and they've got bills that are popping up, now your risk needs to go up, and you may need to think of looking at things a little bit differently while that's going on. And to further that point of the risk assessment, the age of the perpetrator is also one of the things that gets tracked. And so you can see here that on the far left side of things, for folks that are kind of in their 20s, they're just have graduated from college perhaps, so they're getting their first positions in a company. They likely don't know where all the opportunity exists and where those holes are, so they don't know where to go if they need access to funds, and they may have a lesser need to have access to funds. And so the amount of frauds that happen with those that are younger is less. And on the flip side, on the older end of things, for folks that are in their mid-50s and 60s, they probably have gotten their nest egg set up, and so don't have as much of a motivation to commit a fraud either. They've gotten through those tough times. Whereas in the middle, there's a lot going on there in this bell curve for folks that life events are happening in their 40s. They're having kids that are starting to get into college. They're having parents that are falling ill. They're maybe even going through a midlife crisis and need access to capital to go buy a big fancy car or something like that. But all that to say that your risk assessment needs updating from time to time. And just because you hired somebody in their late 20s doesn't mean that they agree to do the right thing for their entire career. Now that they're in their mid-40s or their late 40s, their life circumstances are different now. And as owners and executives and supervisors of folks that are doing watching over people in the accounting and finance roles, they need to be aware of that and change their risk assessment as circumstances change in their company. Okay. So that's a little bit of a background. So let's jump into the problem a little bit more, and we'll talk about this study. Like I said, the Association of Certified Fraud Examiners does a study every 2 years. They publish it. You can go out to their website, acfe.com, and you can look at the 2014 study, and you can also look at the studies back over the years. They started in 1996, so there's tons and tons of data out there, and these are just data-rich little kind of desk reference guides that have tons and tons of statistics and charts and graphs and so forth. And I will, I'll talk about that here as we move along. So, I encourage you to go out there and take a look at that. The executive summary here. There's about 1,400 cases that are involved in this study from over 100 countries around the world. The Certified Fraud Examiner credential is something that's recognized globally, and so it's these fraud cases come from everywhere. It's CFEs providing content based on their cases that they've worked on. So this is real life happening here, and it's all kind of compiled and built up into this study. Some statistics that I wanted to share: 5% of annual revenues are lost to fraud, and that is a statistic that's been true as long as they've been doing this study. It ranges from, on the low end, about 4%. I saw it go up to 7% 1 year, but it's right around kind of this neighborhood. And so if you think of an organization and what's 5% of their top line revenues, that's a big number, and that's a number that they would intentionally budget for. And so for them to lose that is something that is really meaningful to them. So it's a big deal. If you extrapolate that out to the gross world product, you come up with $3.7 trillion of fraud that on an extrapolated basis is lost to fraud every year. So it's a huge deal. That's what we're dealing with. The impact on small businesses is much greater than their larger counterparts. If you think about it in a couple of different ways here, if you think about it, a $100,000 loss to a small retail operation or a small internet company, that's that's harder to recover from. $100,000 means a lot to a small business, whereas somebody, a Fortune 500 company, it'd be a rounding error. It wouldn't mean nearly as much to them. And secondly, big business, they can afford and have reason to have an army of accountants and have very, very sophisticated internal control programs. That's not true in small business. With small and medium-sized businesses, they've got smaller accounting departments, and they have a harder time setting up really good internal control processes that have segregation of duties involved, which is something that auditors love to talk about. You want to make sure that folks aren't approving something that they've worked on, that there's a good separation there, and that's harder to do with small business. The study shows that with companies that are intentional about their fraud prevention programs, that have specific things set up that are designed to catch fraud or to prevent it from happening, they're more successful. Hotlines continue to be the #1 way that fraud gets uncovered. It's some anonymous 800 number that an employee or a vendor or a customer can call to report something they see that looks funny. Proactive data monitoring is another, and this is, more and more everything is electronic, and accounting functions are creating, tons and tons of data. So you've got to be able to monitor that in a meaningful way, and I'll talk about that a little bit more in a little bit. And just simply, passive detection methods take longer. So things that are not really designed to catch fraud, it just takes longer to uncover fraud, as you would guess. And not only does it take longer to uncover, but the fraud grows and grows over that time. So it's important to be intentional. Executives are involved in the largest frauds. That's been true for some time. So, and you might guess that too, that if an executive comes in and just says, "Well, do it. I'm the owner. I know that we have this process in place, but I need this check right now. So just go ahead and do it." That type of thing happens often enough and needs to be dealt with. First-timers, about 85% or more of frauds are perpetrated by first-timers. And so this, again, the importance of the risk assessment process is true here as well. And I kind of think of this as a continuum of righteousness as it relates to the rationalization side of things, where on one end of the continuum, you've got, say, 10 to 15% of the people that will always do the right thing no matter what. These are the kind of Boy Scouts and Girl Scouts of the world that even if they're presented with tough times, they'll find a way without doing something wrong. And you've got another 10 to 15% of the folks on the other side of the spectrum that will always do the wrong thing no matter what. They just kind of like the thrill of the chase. These are kind of career criminals and so forth. And then you've got a big chunk of people in the middle that will do the wrong thing in the right circumstances. They're generally good people, but they get backed into a corner and they think that the only way out is to perpetrate a fraud. And so that's what the risk assessment is meant to deal with, is that big chunk in the middle. And those are probably the first timers that this study is talking about. You see this showing signs, and that correlates with this slide that we had previous. There's definitely signs that are shown as these frauds get uncovered, and we are able to use hindsight. Perception of detection as a deterrent is a big deal, and what I'm talking about here, internal controls that are set up to not only look for ongoing frauds, but their mere existence alone could be seen as a prevention technique, and I'll tell you a little bit of a story about this. These are things like a surprise audit or internal audits or a second level of review of information, just things that somebody could say, well, I could perpetrate a fraud here, but I know that our internal audit function comes around from time to time and they could catch it, so maybe I won't. That's simplified, of course, but that's something to think of. A quick story, we do work for a dairy up here and one of the key metrics that they measured the performance of their business is they call it yield. And the amount of milk that comes into the plant isn't always the same as the amount of milk that leaves the plant. There's spills that happen, and there's a little bit of spoilage that can happen, and so they would track this yield figure, and they would kind of figured 97% or thereabouts of milk that came in would go out in jugs to grocery stores. And so they started to notice that that number was slipping to say 93 or 94%, and they couldn't really figure out why. But come to find out, they learned that employees were taking jugs home out of the shipping dock door on their way home, and so that milk obviously never left and was never sold to a grocery store. So it made this number look bad. So what they did was install a camera on the shipping dock door right above the door that had a blinking LED, a red light in it. The camera didn't work. It didn't work at all. There was no footage being filmed. There's nobody monitoring that footage. But the fact that it existed and that it was there and the possibility that somebody might be looking was enough to deter that practice. And so after a month or so, that number came right back up to 97%. So those sorts of things are really effective. Okay, so what we're looking at here is a slide that tells us the contributing weakness that allowed the fraud to happen. So this is that opportunity part of the fraud triangle, and you can see that lack of internal controls, that big brown chunk, 32%, that's a big contributor to the fraud taking place. So not having good tone at the top is shown right there in not having good internal controls, and then overriding controls that are in place, that's 19%, so over half relate to those two things. And then not having management review, poor tone at the top itself is listed. You can see that now we're kind of, with those 2 or 3 or 4 things, we're over 75% of the things that contribute to fraud happening. So again, good internal controls, good tone at the top, those two things are going to drive really good results as far as fraud prevention is concerned. Okay, so now moving on to some more of the details. So the way that fraud gets uncovered, time and time again, it's shown that it's uncovered by tip more often than not. And tip, again, is generally done by way of some kind of an anonymous 24/7 hotline, 800 number that folks can call. And chances are, if a fraud is happening, somebody knows about it. And they want to get it off their chest. They just don't know how to do that without causing trouble for themselves. And so the companies sign up for and publicize and use these hotlines that folks can call. So and that has been time and time again the #1 way that fraud gets detected. Internal audit or management review is the second category there. Internal controls just in general is also highlighted. And then way down there at the bottom, kind of dead last place, is the external audit. And this is coming from an external auditor. And so it's interesting to note that is the very last thing in line, even below the police in some years, where somebody called 911 to report a fraud, and that happened more often than the auditors catching it. I've got a little note there that I'll share in a minute, and kind of my reason why I think that happens. But you can see that this is kind of how the fraud gets detected and initially. So to flip that on its ear, so you've seen how it gets detected, and what this slide is showing you is how frequently different anti-fraud measures are in place. And you can see that external audit is way up there near 80% of the time, whereas it's only it only detected fraud on a far less basis, less than 5% of the time. And there's a reason for that. Companies get audits for for varied reasons, to fulfill bank responsibilities, to fulfill regulator responsibilities as well, not just to prevent fraud, but these other things. Internal audit, the hotline pieces in the middle of the pack, this proactive data monitoring, which we'll talk about soon. All these things that are kind of at the bottom of this list are some of the most effective things in place. So it's interesting to note that the things that a lot of companies are putting in place aren't necessarily doing the job that they think they are. And then one last note on this hotline piece. What this slide is showing you is the detection technique that ultimately uncovered a fraud when a hotline was in place. That's the brown bars. And the detection technique that ultimately uncovered a fraud when a hotline was not in place, which is the red bars. And you can see that particularly with the red bars, they're a little bit more even as far as the distribution of frequency. It's not, there's no overwhelming favorite necessarily. Those first two on the left are kind of in a tie, whereas when you do have a hotline, you can see that percentage goes way up in tips. And what this tells me is that by inserting a hotline, you don't have to rely on everything to catch the fraud, where if you don't have a hotline, you've got to cast your net pretty wide to make sure that you're catching everything. And so it's a way to get a big bang for your buck by installing some kind of a hotline. So important to note. Okay. So the last kind of slide on this particular area, and there's a lot of information on here, so I'm going to walk you through it a little bit. But this may be, I tell my clients this may be the most important piece of information that they'll see in this presentation. So the first column that you see there is a list of internal controls that are in place, and generally these are meant to detect and prevent fraud from happening. The next column is the percentage of cases in this study where that particular internal control was implemented. So for proactive data monitoring, we've got, that was involved in 34.8% of the cases. The next column that says yes is the amount of the fraud in cases where that control was in place, so $73,000 in this case. So they did have, in those cases, they did have proactive data monitoring in place, and it didn't prevent the fraud from happening altogether, but it did stop the fraud at the $73,000 level. And so then the next column shows how much the fraud was when they didn't have that control in place, and you can see it jumps way up to $181,000. And so if you look at the difference between those two things, you can kind of extrapolate, what's the relative effectiveness of each of these controls. You can see almost a 60% reduction in the amount of the fraud in cases where data monitoring was happening as compared to when it wasn't. So again, if you want to start a fraud prevention program, you want to start getting some tools in place, it's probably best to start at the top of this chart as opposed to the bottom, and get some big bang for your buck. And again, at the bottom is that external audit of financial statements. You can see it was in place, over 80% of the time, but it only had a, roughly a 32% reduction in the amount of fraud. And really, if you think about that, financial statement auditors come out, maybe once a year for a couple of weeks at most. So they're just not there. They don't have as many at-bats as all of these other things do. And so, some of these are happening on a 24/7 basis, and definitely happening all the way throughout the year. And so they've got more at-bats, so chances are they're going to have more hits. So the notion that we don't need a fraud prevention program, we've got an audit and the auditors will catch it. That's just not accurate, because a fraud could be happening on and on throughout the year, and so you need to catch it much sooner than just once a year when the auditors come out. So that's my little bit, and kind of defending the audit profession a little bit. Audits aren't necessarily designed to catch fraud; they're designed to make sure financial statements are presented properly. So anyhow. So I've mentioned this data monitoring piece a couple times. I want to touch on that briefly, and then we'll get into a discussion about the careers and so on. So this is just a way to get smarter. Like I said, there's reams and reams of data available from the accounting process nowadays, and so using that to our advantage is really important. And it just, from an auditor's perspective, it helps us make better test selections. It helps us include 100% of the population as opposed to just kind of a random walk and selecting samples just kind of out of the air. A good example of this is in our employee benefit plan practice. One of the things we look at is an employee census, which includes a lot of payroll information about all the employees that participate in a plan. And when we're looking at that, it used to be that we would get that on paper, and we would kind of do a flyby overview of it, and pick a couple of things that looked funny, but basically, randomly select other things that we wanted to look at. Whereas now we get that in an Excel spreadsheet, and so we sort that in 100 different ways, and we look intentionally for the stuff that looks goofy, and so we select that to test those specific things. So now we're selecting the things that look goofy as opposed to hoping we find the things that look goofy by way of a kind of random sample. And as an auditor, I feel a whole lot better about it, knowing that we've looked at all the goofy stuff. So that's what companies can do too. They can analyze those types of things and dig into a deeper level on their data, and that's what this is all about. And I should say the acronym CATS at the top stands for Computer Assisted Auditing Techniques, and that's kind of a term of art in the profession. So that's what we're referring to here in this data monitoring piece. One quick story, just early in my career, we used a data extraction software in our audit practice, and I was asked to audit the revenue cycle for a private school. And so we went out and we started to take a look at that cycle, and the database I got to begin with had like 20,000 records of all different sorts of cash receipts. Each cash receipt had a type code attached to it, and so what I needed to do was look at I was looking for tuition for this private school, and I was looking for instances where a student paid too much tuition than they should have. And so I got this big database of 20,000 records, and I was able to first filter that down to about 7,000 records because there was a type code associated with each type of cash receipt. So I was able to look at just the tuition ones. And then I was able to summarize that by student ID, and I got totals for each student, which got me down from 7,000 to about 500 records or so. And in that 500, I saw more than 100 that had tuition payments that were above the listed tuition rates on the school's website, some by 2 and 3 times, which looked funny. But then I went and asked some questions, and I realized that it wasn't a student ID that I thought it was, but it was actually a family ID. So there were multiple students that included, that were included in one family ID. So that's why I was seeing 2 and 3 times. So then I was able to cross-reference that with a database that included a student roster, and it all boiled down to one kind of goofy situation that I needed to audit and look into. So I went from 20,000 records down to 1, and it took me about 10 minutes to do it. Really, really powerful stuff. So that's the reason why this proactive data monitoring jumps to the top of the list on those effective internal controls that we saw a couple slides ago. So, and you can do that with all parts of the business's accounting system. It doesn't just have to be revenue. It can be the cash disbursement cycle, and it can be payroll, and it can be any of them. So really powerful stuff, and that's a tool we use often. Okay. So we're kind of rounding things out, but I did want to talk a little bit about career opportunities out there, and also some projects that I commonly work on. So again, with the career opportunities piece, chances are that coming right out of school, it'll be fairly difficult to find a position that you'd be qualified for to jump in on a full-time basis and work in the fraud prevention area right out of school. Typically what I've seen is that folks kind of cut their teeth in a variety of ways first, get some experience, then maybe go for the CFE exam for instance, and then move into a full-time fraud position somewhere if they'd like to. So, the public accounting firms are a great place to do that because auditing is, even just plain auditing of financial statements is very similar type of work that you would do in fraud detection areas and forensic accounting. So, public accounting firms are a great place to test that out. For sure, and some public accounting firms have dedicated programs like Clark Nuber does, and there's many others out there as well. So you can certainly get great experience that will serve you well going forward there. Private companies, particularly the larger ones, will have in-house dedicated fraud prevention teams. That's all they do. It's almost like a subset of the internal audit function. They'll go out and they will intentionally look for fraud in a variety of places within the organization. Law enforcement is another area where CFEs are found. It's interesting. CFEs are not all CPAs or accountants even. The majority of them are in the law enforcement area, either with a police force or as a private investigator. So you can definitely go in and do that. In the state of Washington, we've got a state auditor's office that goes out and audits variety of businesses, to make sure that they're paying their taxes the way that they should. And they love forensic accounting professionals as well. The Department of Revenue, particularly, is one at the state of Washington where we see a lot of those types of professionals going. You can move into the insurance industry. The FBI and the IRS, they also love forensic accountants just because of the way that we think. Whether you're working on accounting fraud or accounting issues or other types of crimes, we're able to problem solve and we're able to think through things a little bit differently. Tom Hanks's character in the movie Catch Me If You Can is a fine example of something like that. I think he was working with the FBI at the time. So there's a lot of career opportunities out there, but like I said, chances are you're probably going to need to cut your teeth somewhere else first. Okay, so now we'll touch base on this common projects piece, and then we'll wrap it up and open it up for questions. But again, I wanted to reiterate that I spend about 20 to 25% of my time on things like this, these fraud and forensic issues, and the rest of my time I spend just kind of doing common financial statement audits. So, but I wanted to share some of the things that you'd be working on by way of example here. So, I kind of lumped this into 3 or 4 categories, and they all kind of involve, again, a continuum along the fraud process. But the first and probably most common is dispute resolutions, where you've got 2 parties that entered into a transaction of some sort, and that there's a provision in that contract that involves accounting or finance or operating results of some sort, and there's a dispute that's developed about how to calculate this or that, and ultimately there's a payout that needs to happen at some point. So we get involved in those disputes because we're experts in accounting, and we're also experts in finding things that aren't accounted for properly. So there's an aeronautics company that we worked with recently where the former owner sold the business, and there was a provision that said, we'll pay you X amount as a down payment, and after about 18 months, we'll come back and we'll check out how the company has been performing. And if the company performs well after the initial transaction, over that 18-month period, say, you'll get a little extra payment, a little extra bonus that'll come out of it. There was a dispute about how the performance was being measured, and we came in to help out. There was a medical taxi service that we did some work with, and 2 owners of that business got in a dispute about how things were being accounted for, and we helped them with that. There's a real estate developer that we worked with, and he had worked into his employment agreement that his compensation would be a base salary, and then he would also get paid for transactions that took place. Them selling a building or a project or some chunk of real estate. If they sold it, he would get a percentage of the proceeds that came from those sales. And he would also get a percentage of the income that the real estate earned over the time that it was being held. The amount that this individual ultimately was paid was different than what he thought it should be, and we got involved and were brought in to help calculate what that is. So that was our involvement there. It's really, really interesting work. And then there's nasty things like embezzlements where there's theft. There's a big fraud that we did that took place over about a 10-year period, was well over $500,000 that involved a landscaping company. It generally was in the payroll side of things, and so we went through that with them and helped them kind of resolve things. There was a tribe up here that had some trust accounts that had some funny financial reporting involved in it that appeared to be intentional, and so we got reeled in to help with that and help unwind basically what happened. There's a retail business that we worked with that was unwinding, and there appeared to be some funny accounting entries that got involved. Ultimately wound up being well over $500,000 again of fraud there. So we went back through, traced back through the accounting records, and were able to understand and uncover some improper accounting that took place that resulted in a big payment for that particular client. And then lastly, there's kind of a third category of things that I refer to as like a royalty type of an audit. And there's businesses out there, and a common one that we work with is video game developers, where a company will develop a video game, and then they will license that product to a publisher, and the publisher will then sell it out to the public. And so the developer gets paid on a per unit basis. Maybe they get a nickel per unit or something like that from the publisher. And so the developer basically has to take the word of the publisher that so many units were sold, and then they get a nickel of that for each unit. So we'll go in and we'll audit the books of the publisher to make sure that the number of units sold is correct. So we get involved to do those sorts of things with licensing agreements. Same thing for property managers, where they're getting paid on a basis that involves number of hours that their professionals were working, or dollars of rent per square foot or something like that, and we'll get involved to audit those types of things. And there's a municipality tax issue that we dealt with too that was kind of in the same vein. And then on the friendly side of things, we also get involved to do internal control studies of organizations that want to prevent fraud from happening to them. They need to fill in their holes, but they don't have the resources inside the company to be able to do that on their own. So they ask us to come and help out with that, which is great because it's preventive, it's proactive. We're not dealing in tough and stressful circumstances where a fraud's happened and we need to know why. So anyway, those are the types of projects that we work on. It's a great variety of work. I get to tell great stories about the projects that we work on, and it really is, it's terrific work that we wind up leveraging as much as we can. I've had all the way from interns that have worked for Clark Nuber up to managers help me out on those types of projects, and it's really rewarding work for those professionals. So with that, I'll turn the mic back over to Jeff or to Lizzie, and maybe we can answer some questions.
Pete, thank you, and I'm going to quickly hand it back over to Lizzie, and this is what I propose because we had a lot of questions come in, but we're also bumping against the top of the hour. So maybe Lizzie, you could get a couple of the. I know you had a few questions about recruiting and Clark Nuber, like how to apply, and whatnot out of the way first, and then for anyone who wants to stay on, we can maybe ask a few of the questions that were asked relative to Pete's presentation. Maybe that's how we pros. And if you guys want to stay on, and if you need to go, we understand, audience, but if you can stay on a few more minutes while we kind of rapid fire these questions to Pete, then we'll get through a few of them. How does that sound?
That sounds great.
All right, Lizzie, well then you take it away.
Okay, well, thank you, Jeff. And like you had said, we did get quite a few questions came in about recruiting, or how do you get involved or jump into public accounting, especially if you're just kind of starting out. So the best advice I can give is that you want to apply directly through Clark Nuber's website, or whatever firm that you're looking at that you'd want to apply to. We do fall recruiting, just like all other public accounting firms, where that's when we have our entry-level positions, audit associate positions. And as Pete mentioned, you can't really start out in fraud, or you can start to get involved in it, and then you can kind of move that direction, even though it's not always a full line of business, or a full line of business for you to have clients for, I guess I should say. But the best way is to go to Clark Nuber's website and also look for postings. We do recruit occasionally outside of fall recruiting for people with just a couple of years of experience, or people that maybe have some good general private industry experience but want to get into public accounting, in particular fraud, and that's when you would do that. And of course, you're welcome to always contact myself. My contact information is posted. I'm happy to talk to people about their individual situations and what they're looking for, and try to help give advice there as well. Let's see. So we also got some questions about how many years of experience do you need to get into forensic accounting? And I feel like Pete already kind of answered that one by saying that you get to dabble in it, and it's something that you can transfer into eventually, or get involved in projects, but unless you're working directly for a large firm that has a full forensic department, a lot of times you kind of have to make steps going that direction. I want to turn the next question. Oh, go ahead.
Just a quick footnote on that, Lizzie.
Yeah.
The CFE exam does have some experience requirements in order to take that exam, as just as a baseline, if you wanted to if you wanted to take that exam, that credential obviously would be helpful in working in this field. And you accumulate a number of points. The exam itself is much like the CPA exam. There's 4 parts, multiple choice, but you would need a certain amount of points or kind of life experience in a variety of ways in order to qualify to take the exam. You can get that life experience by working. You can get it by getting credentials like the CPA or others. You can get it by having an accounting or a degree from a university. All those sorts of things add up in your favor, but generally I've found it takes about 3 or 4 years of experience, some kind of a credential and a degree in order to qualify to sit for that exam.
Great, thank you, Pete. And a couple of the other questions came in. This might be in line, so let me know if there's anything you want to add. But what can I do now? Either I'm just starting out my career or I've got a couple years of experience to transition more into forensic accounting down the road. And so would you recommend the CFE exam or?
Yeah, I would recommend, this will benefit your public accounting career or whichever kind of industry you're working in right now. But just kind of soak up as much information as you can. If you're in public accounting, there's a great deal of information that will just help you be a better auditor, and particularly relative to internal controls. Spend some time studying that, understanding that process, and getting your arms and your mind around how that process works. You'll be required to do that as a part of every financial statement audit that you do. So it's something that folks that are starting out in their career may or may not have involvement in. So if you are interested in forensic accounting, make sure that you spend time in that area. Volunteer to do that kind of work, and that'll serve you well down the road if you have a good, solid understanding of how controls are supposed to work. Because then if you move into environments where you're seeing that controls are not working well, that'll be a red flag to you, and you will see that maybe before somebody else that otherwise that didn't study internal controls. They may not see that.
Okay, great. A little bit more of a technical question we got when you were talking about accountants maybe thinking something might be a little off, but the CEO comes in and says, "Well, just process the check," but maybe you've got kind of that inkling that there's something not right. The question was around, should I make notes or an email, somewhere to track that I had a concern about it, and then maybe have a conversation with the CFO, even though, should you just process the check and then do that, or what can I do to keep from getting in trouble with the law?
No, that's a good question, and I definitely encourage, if you see something like that happening, taking notes and making some kind of record of it. I send emails to myself frequently, not for that particular issue, but just as my way of note taking. But whatever way makes sense for you, definitely do that. If there is a hotline in place and you're aware of it, I would encourage you to call that hotline and start to get the reporting chain rolling. Inside the organization, outside of a hotline, the CFO may be a good person to have that conversation with. If there's an audit committee or if there's a board of directors outside of the organization, then that might be a good a good outlet for that type of information, something that they would want to see. So those are good. Those are definitely good things to do. I mean, it's a slippery slope and something that you've got to be cautious about. But if internal controls are in place, then that's important to talk about to whomever would be the right person. I think you're right. The CFO would be a good outlet, but that audit committee and the board of directors is another one.
And then we also had a question of what is non-cash fraud?
So non-cash fraud would be theft of inventory, as a for instance. So not every business is going to have inventory that has street value, but think about like an auto dealership. Their inventory is cars and trucks, and an electronics company, their inventory is maybe stereos and TVs and things of that nature. So anything that doesn't involve cash but does have street value or something that you might want to use in your home or your business. I mean, if you think about the construction industry as a for instance, we hear about schemes all the time where somebody is taking building materials that were bought by their employer, and they are running their own little business out of their garage or using their truck and going around and using materials bought by their employer, and then using them in their own little business. So those sorts of things would be non-cash fraud. That's a good question.
Great. I've got a couple questions about the CFE certification, elaborating on earlier stuff we mentioned. Do you feel that CFE certification is the best one in the fraud realm? And then another person kind of piggybacking off that had asked whether it makes sense or would you recommend getting the CFE designation maybe before applying to an accounting firm?
Okay. I'm a little bit biased, but I do think that the CFE is a great credential, and just speaking personally, the studying, the materials that you get when you have to study for that exam, it was one of the most fascinating academic exercises I've ever had. It's just really interesting information. It involves obviously auditing and financial matters and accounting, but it also involves kind of the human element, sociology and physiology, and the fact that when somebody's lying that they will look up and to the right, and when they're telling the truth they'll look down and to the left or something like that. All of those sorts of human elements are built into this curriculum, along with the history and the theory and so on about fraud and how things happen. So academically it was a terrific exercise, but that really did help me kind of get ready to go in and do the work. The AICPA also has a credential. It's called a CFF. I haven't taken a look at that exam, and the grandfathering process for that particular credential I think is now over. But so you'd have to take an exam to do that. I'm not exactly sure what it covers. It's similar, but the CFE credential again is one that's recognized globally, and it's something that the most fraud prevention professionals have that credential. And then as to the question of doing the CFE before applying for a job in public accounting, I haven't seen that. And what I have found, if you're going to be working in the accounting field, particularly in public accounting, or if you'd like to make your way up the kind of industry org chart, working as a clerk and then an accounting manager and then a controller and so on, I really think that the CPA credential is going to be the first thing that you should tackle. And particularly if you're in public accounting, your employer will want you to get that CPA first. Having the CPA under your belt, having a couple years experience working in a firm, all of those things will make it that much easier for you to take on the CFE exam. Your work experience, what you learn from taking the CPA exam, all those things are kind of built in and are helpful for completing the CFE piece.
We also just got a question about your thoughts about the Certified Internal Auditor certification.
Yeah, that's another good one, for sure. Obviously, it's kind of a different field. It's very similar context where you're probably working inside a large corporation. I don't see too many small and medium-sized businesses that have internal audit functions in a meaningful way. And so, if you're going to be doing internal audit work, it's a terrific designation. It really helps you, understand how controls work. Helps you understand how to build an internal audit program, the types of things you should be looking at, how to prioritize those projects, and so on. It's a terrific credential, and obviously it's designed for a very narrow field. The folks that have that are very likely going to be going out and doing internal audit work. So if that's something you're interested in, I definitely would endorse that.
And the last series of questions that I received are kind of more the recruiting, so I'll go ahead and handle that. A lot of people were asking about career opportunities at Clark Nuber beyond the college recruiting. So if you have 10 to 15 years of experience or even a couple of years of industry and you want to transfer over, how would I apply to your firm? So like I mentioned earlier, you will want to go to our website, www.clarknuber.com, and that is where we have our current job postings. But we also have up there at any time, you can always submit a resume or contact me through the site, just inquiring or letting me know your situation. And sometimes we do have openings that come up out of cycle, out of season, and we're always looking for audit associates and tax associates. and then all the way up audit seniors and tax seniors and managers and senior managers. So we have commercial, not-for-profit, and high net worth individual clients, as Pete had mentioned earlier. So fraud seems to tie in more so with audit, but that's not always the case. And a lot of times, as Pete was kind of mentioning in the middle of his presentation, there will be opportunities to start to work on some fraud clients, or just plain comes up on the particular client that you're working on. So I think that's the best way to get into it, and then to find out specifically how to get involved in our firm. Do you have anything you want to add, Pete?
No, I think you've got it. Thanks so much to everybody for joining here. And if you do have questions that maybe it didn't get answered by either Lizzie or I, please feel free to email us. Our email addresses are up on the screen.
Yeah, thank you so much.
And Lizzie, I was going to make that last point just to reiterate. There were a few questions that didn't get answered. If you have recruiting questions, or you'd like to follow up with Pete or Lizzie about a question that you heard today, I'm sorry that we couldn't get to every question. I just texted or messaged everyone Lizzie's email address. Lizzie, hopefully you won't get bombarded here. But there were just some outstanding questions. So Lizzie and Pete, thank you so much for taking the time, and everyone in the audience. I'm sorry that we went over, but it was just an outstanding session. So thanks for sticking with us. This has been a blast. This will be recorded, and we'll distribute to everyone by the end of the week. So you'll have a link to it. I've gotten a lot of questions about getting the slides of the recording, so you'll have that. It'll be on our YouTube channel. And, yeah, you've got Clark Nuber's information, so give them a look for sure. So, Pete, thank you. I really appreciate it. And, Lizzie, thank you too, okay?